Welcome to Appleby Retirement Consulting, Inc.'s Retirement Minute by Minute. This is Denise Appleby. In this issue, we focus on the age 55 exception to the 10% early distribution penalty. Generally, withdrawals from a retirement account that occur before the owner reaches age 59 and a half are subject to a 10% early distribution penalty unless the retirement account owner qualifies for an exception. One exception is the age 55 exception as provided under Internal Revenue Code Section 72T2AV. Under this exception, a withdrawal is not subject to the 10% early distribution penalty if the participant or account owner separates from service with the plan sponsor in the year he or she reaches age 55 or later, and the withdrawal occurs after separation from service. This exception applies to qualified plans and 403b accounts. It does not apply to IRAs. In the case of Young Kim versus the IRS, appeal to the United States Tax Court, which was decided on May 9, 2012, Kim learned this lesson the hard way. Kim separated from service with his employer at age 56. This means that any distribution from his pension plan balance that occurred after separation from service would be exempted from the 10% early distribution penalty. However, Kim rolled over his balance from the pension plan to his traditional IRA. He subsequently withdrew $240,000 and used a portion of it for qualified education expenses. The IRS assessed a 10% early distribution penalty of $20,000 on the amount that was not used for qualified education expenses. An additional $4,000 was assessed for substantial underpayment of taxes. Kim disagreed with the IRS's position, and the matter was referred to the tax courts. The tax courts agreed with the IRS as, under the tax code, the age 55 exception does not apply to IRAs. Once Kim rolled over the amount to his IRA, he lost the eligibility to use the age 55 exception. The lesson here is, if you have clients who are considering rolling over amounts from their qualified plans or 403b accounts to IRAs, check to determine whether they are eligible for any tax benefit that is specific to qualified plans or 403bs that would not be carried over to the IRA. If you have questions about the rules that govern qualified plans, 403bs, and IRAs, please feel free to contact our office. We can be reached via email at customerservice@applebyconsultinginc.com or telephone at 973-313-9877. Or you can visit our website at deniseappleby.com. This ends this podcast. Thank you for listening.